Hey, what's up, my friend? So today, right, I want to share with you 5 tips, right, that will improve your trading entry. So this will be useful for you if you're the type of trader that you find yourself you're always entering your trades too early and then you get stopped out, or you enter your trades too late, the market reverses and you get stopped out. So if you're trying to, fine tune your entries and improve on it, right, then today's episode will help you with it. So first and foremost, right, the first thing you want to do is to trade with the trend. I know you might think, duh, Rayner, duh, trade with the trend. Yeah, but let me just go one step further. When I talk about trading with the trend, right, it has to be trading with the trend on a relevant time frame. What I mean by this is that if your entry time frame is on a 5 minutes time frame, then clearly, right, it doesn't matter what the weekly or the monthly time frame trend is because it's irrelevant to you. So you want to be trading with the trend on a relevant time frame. So let's say, for example, you're trading on a daily time frame, then the weekly time frame, that is a trend that you want to be paying attention to because that is relevant to you, right, if you're trading on a daily time frame. Make sense? So what you can do is use a factor of 4 to 6. So for example, on a daily time frame and a weekly time frame, that is a factor of 5 because 5 days is equals to 1 week. Make sense? And let's say if you're entering off the 5 minutes time frame, right, then if you use a factor of 6, right, your higher time frame is the 30 minutes time frame. So the way to define the higher time frame trend is to use anywhere between a factor of 4 to 6. Okay, I hope that makes sense. So number 1, trade with the trend using, or rather referring to, a relevant time frame. Number 2, you want to trade from an area of value and not far away from it. So let me give you an example. Let's say the market is in a nice healthy trend. Okay, making a series of higher highs and higher lows. And when you overlay the, let's say, the 100-day moving average across it, you notice that the market has bounced off the 100-day MA, quite a number of times, maybe 3 times, 4 times. And right now, at this point in time, right, when you look at the chart, the price right now is very far away from the 100-day moving average. It's very far stretched away. So at this point in time, yes, the market is in an uptrend, but you don't want to be buying at this point in time because you have seen that repeatedly, right, this market tends to pull back towards the 100-day moving average. If you're buying it when the price is very far away from the 100-day moving average, when it's very overstretched away, then at this point, right, if you were to buy right now, there's a good chance the market could reverse, do a pullback, and you'll get stopped out. Okay, so this is what I mean by trading near an area of value and not far away from it. So I use moving average as just one example. You can use trend lines as well, trend channels, etc. Okay, so trade as much as possible, right, near an area of value and not far away from it. If you look at the chart and the market has already made an explosive move, right, a huge breakout, market went parabolic, chances are it's not near an area of value. So moving on. Number 3, wait for a price rejection signal before you enter a trade. So here's the thing, right, when you, let's say you want to buy at support, you have no idea whether support is going to hold or not. The price might just slice through it and break support. Never know. So this is where you can use some sort of a confirmation, right, to tell you that, hey, the market is holding, right, and there's a good chance it could bounce up higher. So what I mean by price rejection signal could be something as simple as, a strong bullish close at support, like a bullish engulfing pattern, a hammer, right? The stronger the close, the more bullish it is, the greater the price rejection. So this is one way, right, that you could, use as a confirmation, a signal from the market that tells you that there are buyers stepping in, right, ready to push the price higher, right? So that's one way you can go about, right, to better time your entry. 4th thing you can do is look for a break of structure on the lower time frame. So let's say, for example, earlier we talked about the price rejection. Let's say on the daily time frame. Okay, you're trading off the daily time frame. But what if the price comes to support on the daily time frame and you just didn't get a price rejection signal? So what now? Well, doesn't mean all is lost because you can drill down to a lower time frame, let's say the 4-hour time frame, and look for a break of structure. So what I mean by this is that if you imagine this, on the daily time frame, the price comes into support. And on the 4-hour time frame, right, you can imagine, right, you will know, right, that the price would likely make a series of lower highs and lower lows on the 4-hour time frame. That's why you saw that strong bearish move on the daily time frame. So what you want to do on that 4-hour time frame is to let the buyers step in, right, and tell you they are taking control. And one way to tell is when you see a series of higher highs and higher lows on the lower time frame. So you can imagine, right, that previously on the 4-hour time frame, the price come into support, you have a series of lower highs, lower lows. So what you're looking for now is for a series of higher high and higher low, telling you that there are buyers now stepping into the market, right, and possibly could push the price higher. So this break of structure, this higher high and higher low, which broke the prevailing price structure earlier, the previous lower high and lower low, right, this break of structure, this new break of structure tells you, right, or rather it's a signal, right, that tells you that, hey, you could enter the market at this point in time. Okay, this is what I call the break of structure technique. And last one, okay, with regards to breakout trading. So I know, many traders, they are excited, right, to trade breakouts, especially when the candle is huge, it's big, it's bullish, the momentum is strong. Oh, Rayner, look at the strong bullish momentum. Rayner, it's time to buy. Why are you stopping me? So here's the thing, right? When the market has gone parabolic, when the range of the candles has expanded, it's probably too late to buy already. This is where the market is about to make a pullback or reversal. You're basically buying near the highs. So to better time your entry for breakout trades, what you want to see is a build up. A build up is simply a tight consolidation on the chart. So you can imagine that if the price is at resistance, it has not broken out, you want to see a tight consolidation at resistance, right? Maybe 10 candles, 15 candles, where the range of the candles are pretty tight. When you have this tight consolidation, then now, right, you want to be buying the breakout, because just below the lows of that consolidation, just below the lows of the build up is where you could set your stop loss. Now you have a much more reasonable size stop loss. And during this market condition, during a build up that's being formed, volatility of the market is low. And one thing for sure is that low volatility markets, it doesn't persist forever, right? Eventually, price needs to make a move. Eventually, volatility picks up. And let's say if it breaks out higher, volatility picks up, right? You are pretty much in a very nice sweet spot, right, to catch the breakout. Okay, so if you want to trade breakouts, do remember, trade breakouts with a build up. And I know, right, some of this tips that I just shared with you, it would be great, right, to have price chart illustration. And I do agree, right, because this podcast really isn't a training video, but really to share with you broad-based concepts. So if you want to have a deeper training, just go down to my YouTube channel and just search for the things that I just mentioned, right? Like, for example, breakout with a build-up. Search on YouTube, trading with Rayner. You should be able to find something. Search for, price action trading strategies. You should be able to find something, right? Or search for better time your trading entries, trading with Rayner. You should be able to get something, a training video that explains these concepts in more details, okay? So with that said, right, I have come to the end of this episode. Hope you got value out of it. If you did, right, smash the thumbs up button, subscribe to the channel, and I will talk to you soon.